Hello again. So, today I want to talk a little bit more about exchange-traded funds because I did mention exchange-traded funds earlier, and I did say that you could get them, but I didn't really get enough in depth about it. An exchange-traded fund can have a different yield. It can be 3, 4%, 5%, or whatever the yield can be, just like any stock can be. But for some people, they want exchange-traded funds because they want diversity immediately. Myself included. I like a diversity. But I don't use ETFs right now. I do like TGIF as an exchange-traded fund because it's at least 5%. It's 5.25%. And the price isn't that bad. 40-something the last time I checked. But as an exchange-traded fund, they may have stocks, a mix of stocks. It can be all stocks. It can be stocks and bonds. It can be a bunch of different things together, and then you buy your piece. It's similar to a stock that you just buy it, and you own a piece of a much larger thing. But the much larger thing does not just consist of one company. It consists of either multiple companies or bonds or a lot of different instruments that you can use. Just think of them as stocks and bonds right now. If you want to do the research on a particular ETF, you can look it up and find out all the things that it covers. Some people want to think of them as a mutual fund in one stock. That's not really what it is, but it might help you think of it like that. I would prefer to just think it's a basket of stocks and bonds, or just stocks, or it could be just bonds, but it depends how they have a makeup for the ETF. Exchange traded funds. So you can buy some ETFs on NASDAQ or whichever exchange that you use, whichever one they happen to be listed on. I don't know. I don't know if there are ETFs over the counter. There probably are ETFs over the counter. Mostly I would think that an ETF, you could look for ETFs, and I'm sure you can use your broker to purchase them. I personally, right now, I'm using Fidelity. I also use Vanguard from time to time. I haven't used Charles Schwab, and a lot of people like to use Robinhood or Webull. I don't recommend Webull because it's a Chinese app. I prefer to use something like Robinhood or one of the other apps to buy stocks. You can use a Fidelity app, or you can have a you don't have to use the app. You can sign up for Fidelity or Schwab or Vanguard and not use an app. You can just establish your brokerage account. But back to ETFs. Exchange traded funds give you instant diversification right away. Now, personally, I like to do my stocks by pick one, and get 42 positions. I look at each individual stock and find out which ones that I personally like. I got to see if the yield is good, if it's got a good beta for me. Now, I'll buy some that have too high of a beta from time to time. It can be over 1, and I still buy it. But the yield has to be good. I prefer 10, 12, 15, 20% yield. Some stocks give you an 18% yield. Like I said, TGIF, the last time I checked, it had over 5% yield, 5.25% the last time I checked. So if you're looking for instant diversification, that would be a good thing. Now, should you buy a bond that also pays 5%? It's up to you. Bonds have safety. What about a stock that has 5%? Certain stocks have high volatility. They'll go up and down in price really quickly. So for safety, but so will an ETF. An ETF price can go up and down also. Bonds usually have a lower yield and are safe. Stocks usually outperform bonds. ETFs can be a mixed bag. For the most part, if you're looking for, it depends on the ETF itself. What is it focused on? I like TGIF. I haven't bought any yet because it's got the minimum yield that's acceptable to me. I have to go and check to see a little bit more about ETF, what they carry, what they do, what stocks or bonds or what the mix is. I don't know. But the important thing is, to me, the yield, I want a yield that's at least 5%. Now, if you take a look, there are bonds that will give you a 9% yield. Some bonds will give you a 13% yield. Is it safe? Most of the time, it would be safe. If it's a corporate junk bond, it may not be safe. But for an ETF, you look at an ETF, exchange traded fund, it's instant diversification. If you look at certain stocks, it's a BC, can be a B, Business Development Corporation, a BDC. It can be a real estate investment trust. It can be an oil stock or natural gas stock, and the yields will vary. Personally, I like to pick individual stocks. ETFs are a good thing if you don't know what you're doing and you're afraid that you're going to waste your money. An ETF or a bond might be something you want to look into. I don't like bonds because the yield is too low. If you like particular stocks, if you want to say, well, what stocks do you use? I'll let you know what stocks I purchase. If you want to have similar results to me, you can buy the same stocks I buy, if you want to. I'm not giving you any financial advice. These are the ones I buy. If you want to do the same, you can do the same. I'm not advising you to do the same, but if you want the similar results, that's fine too. But to make it clear to people, an ETF, exchange traded fund, is like it's one share of multiple different companies, or one share of multiple different bonds, or a mix of companies and bonds. Anything that can help you make money, you might be able to get into an ETF. Now, I want something that has a good yield. So if it's a 5.25%, that's the minimum yield. TGIF, I'll have to look into it. Now, I could get an 18% yield right now on ORC. I can get ARR is 20-something% yield. I think 25, 26, I'm not sure what it is today. So it's up to you to do your due diligence. Now, if you buy stock in ARR, they can cut the dividend. They can do a reverse stock split like they did. You can make money not just with an ETF, a bond, or a stock. You can do something which is called a covered call. I'll explain that on another video. You have to have 100 shares of a stock, and then you sell the right to somebody else to purchase it at a higher price before a set date, and they'll give you a premium. That's another way to make money. But as far as ETFs are concerned, instant diversification and income mostly on certain, yeah. I like ETFs that have a yield. If it doesn't have a yield, I don't want it. If a stock doesn't have a yield, I don't want it. One exception I had was one of the stocks for speculation. They might go up in value, might not. I have one of those. But mostly I want yield. Okay, any questions or comments? Put them down below. Have a nice day.